Good afternoon, folks, and thanks for waiting. And yes, that was great music. George Benson. Actually love that music. Folks, one of the first orders of business here, and welcome to everybody. Thanks for joining me. Sorry about the postponement yesterday. We had just such technical glitches that at about 25 minutes to 3, it just seemed impossible, and it turned out that it was impossible. So thanks for your patience, and if you're listening to the archive, I apologize about your scheduling. I thought that it would be very good for us to have this webcast yesterday or today, just simply because of the price action and what it is that we're looking at with all the planetary index dates, the new moon, and everything that we have going on. But first order of business, I have moved up our stops in the open positions, long positions that we are in right now, which is TBT, TYH, QLD, CBI. Would also be the Qs. I think I left that out. We'll go back and take a look at that later on as we're going into the seminar here. But the volume is light, and we'll just watch this for a bit. So let me take this off the screen here, and welcome to all of you folks that are just joining us here for the first time. The first screen here is just simply a list of the dates that you basically can count on, and so our next one is actually going to be next week? Let's see, today is we've moved this to, well, it's supposed to be yesterday, today. So next one is October the 12th. So you've got a couple of weeks there, and then what we're doing, folks, and this is for all the folks that are really new to this, if you will. What we do in the Celestial Charting webcast, if you will, is we take a look at the different aspects that are going on. We take a look at information that's coming from the New American Ephemeris 2007 to 2020, and it's put out by a company called Starcraft Publishing. This is their phone number, 603-734-4300. I recommend that you get that book. It's where we're taking a look at the moon phenomena issue, which is where my cursor is in the lower right corner here, and we are also taking a look at the planetary aspects. This here lists each day by month, if you will. This is just simply a sample. And what we're looking at here is you can actually count each of these days here. And this helps us to understand the planetary alignments. Now, what I'm going to do right now is just pop up this screen here. Some of you folks have seen this. What I've done is I've gone back over the last 300 years, and I have taken a look at each day, if you will, have counted each of the planetary indexes. Some of these are major, some of these are minor. Right now, that's not as important as because of what we're talking about today, which are the P-index dates. And P-index dates are basically from your daily aspectarian as part of the ephemeris, being able to count each of these. Now, you can imagine the tedious work if you were to try to count each of these and understand if there was some type of probability that was on our side. Well, I've done that work for us by taking a look at 300 years worth of data, so 109,939 days, in essence, worth of data. And you'll see here in the upper left-hand corner I have something called ET, which stands for ephemeris time, original P-index planets. Then I have EST, which is standing for Eastern Standard Time. The original work on P-index dates was done by Larry Pesafento and Ruth Miller and a couple of others. And at the time that they were doing this, they had a different ephemeris that they were using. And so I've gone back and I've matched up exactly the planets that they were looking at and understood the distribution. This was the original work that was done, and so you will often hear Larry talk about P-index dates being 3 days or less. Here's the statistics with regard to how many occurred over a period of 300 years. Here's how many occurred, well, actually from 0 to 21. And what you'll see here is when you got into, and if you had 1 or 2 P-index dates, you had 0.06% chance or 0.45% chance. When you came down here on the larger side, and it was 14 or more, you had 0.55. Now, what I did was I converted ephemeris time, which is basically 5 hours right now behind Eastern Standard Time, and I went ahead and converted all of this information to Eastern Standard Time as well. Just simply because ephemeris time, you can see this is taking place at 1:23. Well, we trade on Eastern Standard Time. We adapt everything to Eastern Standard Time, if you will. And so I've gone back and I've taken a look at a distribution of, and you can see there are some differences here, whether you're using Eastern Standard Time or you're using ephemeris time. Now, this here is what you would see in the new American ephemeris that you have, which has more planets for us to take a look at, and therefore I've gone back through and I've redone the distribution, if you will. Now, what you can see here is I don't have 15 highlighted. Right now I've got the 16 through 25, if you will. The reason why I was talking about yesterday and Sunday being a P-index date is because if the original work that Ruth Miller and Larry and team did with regard to the original aspects, and 3 dates worked because it had 1.82%. If we come back down here, 15 had 1.8% as well. In this case here, I've also expanded it up to 4 versus 3, and so that's where the work was done. But the key date really ends up being, if you will, today. Where you've got less than a 1% chance of something like that occurring. And we're just simply going to watch the price action here as we move into the close here. But in addition to the Qs, which is what we're primarily involved with on our long trades, I have gone and taken a look at each sector inside the S&Ps, and we'll save a little bit of time here for that as well. And, I see the markets are selling off just a little bit here right now, still up 245 on the Dow. So let's go ahead and continue here. This is Sunday's information. So I've taken that aspectarian information that probably most of you don't have, and I've gone ahead and blown this up by day, if you will, so that you can see what it is that we have here, and you can, go ahead and print this information out as well. If we take a look at yesterday, where we had 15 aspects, you've got that information here. And what we can see is if we take a look at the 16th, which is today, where we've got 16 aspects. And, folks, I went back to 1900, and I've not been able to find any time period where we had 3 days in a row where we had 15, 15, and a 16. So, today, with it being a new moon day, is something where we are taking a look at, seriously taking a look at some indications in the market to reverse our positions, our long positions, from long to short. And but I'm not ready to do that just yet at this moment. When we take a look at lunar phases, because we're here also to talk about lunar phases, these are the primary lunar phases, and I have these listed in order of importance. And right now what we're talking about is or today we'll be talking about the new moon, and we'll also be talking about the aspect of perigee, which is occurring on Wednesday. So we've got the new moon that comes in at about, so this would be 11. So it came in already this morning at about 6:10 in the morning, if you will. And tomorrow or this evening, we also have the moon at perigee, which is closest to us. Let me continue on here. Now, I provided a chart in Sunday's email that I sent out, and this here went back and tracked so that you could see the impact that the new moons, full moons have had. I also showed where we have had 16 planetary dates, and they happen to be really kind of the last time we had a new moon, and the time prior to that, when we had the new moon. Not the very last time, but the couple times before that, in this August time period here and in this July time period here. So you can see how well the full moons have worked. You can see how often apogee has actually worked versus perigee. So you can see that these the lunar aspects actually do have some type of impact. Why, I don't know, but they do have impacts on being able to pick out highs and lows. Now, the full moons happen to have a higher probability of success than the actual new moon. So that's why, while we've had this run up here and while we're taking a look at volume, that the new moons, if you go back and you take a look at going back to August of 2010, this only goes back to March of 2011 here, but if you go back to August of 2010, what we have found is that as the markets have moved up into a full moon, 70% of the time, the market continued to move higher. I'm sorry, as the markets moved down. Let me take that back. As the markets had moved down into the new moon, the markets went ahead and moved higher. Now, here's the issue. You know, the new moon came in today, and you have to give these things an orb, and the markets really didn't take off until yesterday. And having all these planetary index dates, we're really not going to know what the total outcome of this is, whether it was a low that we're making or whether it was a high that we're making. Well, when you started taking a look at putting this together with how we came into the bottoms last week with lighter volume and the fact that we hung around the bottoms, that's why we were taking a look at the possibility that this was putting in a low for us. Now, we'll go take a look at we'll leave some time here, and we'll go take a look at the markets as we come into close in about a half an hour and take a look at the volumes and take a look at where we might have some rejections of price and volume. If we take a look at, and this is the slide here that I was really referring back to. I'm sorry, I went back to December of 2005, and so this is where I was tracking new moons as we were either moving up, whether we were coming down, and this is where I came up with my percentage that as the new moons, as we were moving down into a new moon, which didn't happen too often, that ended up being a reversal point. So that's why we're going to take a look at other things other than just the astro aspects, because the astro aspects and the planetary aspects, even though they do give us a good indication, we still have to consider price, volume, and other patterns that are out there. And I expected the market to pull back. In the shows that I did this morning, I showed the S&Ps, I showed the E-mini contract, and there was a Gartley sell pattern. We'll be able to pull that up as well, and so I was expecting the markets to actually pull back. Now, if the markets don't pull back from that spot, what will happen is it will turn out to be a butterfly expansion. So, and we will take a look at that. So let's go on to our next slide here. This is a list of all of the, not all of the other, but I went back quite a ways and took a look at the other P-index dates where we had 16 planetary aspects. And these here indicate whether it marked a low, was the market direction a low. So it marked a low, and we were coming down into this. And what was the impact? It was a minor impact, lasted for 13 days. Was it a reversal? Yes. Here we had the market where we were going into a high. We don't really have that, in my opinion. Here we're taking a look at where markets are coming into a low. This market direction here was a high. In our case here, our market direction is really a low. So we'd be looking at this area here on November 2nd. The market it marked a low. The market was moving into a low. In this case here, it turned out to be a major correction. More days than I needed to go ahead and count and put out there. If we take a look at the June 10th time frame, it marked a low. The market direction was a low, much like we have. Turned out to be an 8-day cycle. If we take a look at the next time that we have it, well, we don't really have another next time that we can go to. In this case here, if we would go back and take a look at the charts, it was somewhat indecisive. So again, just taking a look at the mere fact that if the market was moving down into low, we made a low, and whether or not there was a reversal. Again, that's why we have to take a look at the impact. That's why we went long a couple of days ago when we had the reversal of not the reversal, when we saw how we were coming into the swing points, both in the Qs and in the small caps. Now, what I've also done for you, and I'll go through these slides a little bit quicker. These are each of the slides where we have had either 15 or 16 P-index dates going back quite a way. So this was here in the 2009 time frame, and you can see here, it marked a short-term high, if you will. In this case here, it was back-to-back, the 15th and the 16th. It went sideways for a bit, and then it marked just a short-term high. So nothing really significant there. Let me go to our next time period. The next time period being 2007. You can see here where we had back-to-back and how this had marked a low and it moved up. I don't have this measure, but this is probably a 0.786 retracement. This is probably not a full A to B equals C to D pattern that we have there. If we go to our next time period, we're looking at July 2003, where we had a 15 back-to-back 15. This here as a draw really didn't give us a whole lot of information. If we go back and we take a look at this here, which is the 2002 time frame where we had a 15 p-index date and a 16 p-index date, again showing the two lines representing the two different days, it had marked really, is this a tradable? Was there enough information in here that released anything to us? I think not. If we take a look at this back-to-back of 215s, did this really release any information to us? Not really, because this was in the middle of a move. So it didn't have, to say that it just marked a continuation of the move, that's like, I don't really see that there. If we take a look at the 16th, the 1990 time frame, June 19th and 20th, did this really mark any type of, major bottom or anything along those lines or a market turn? No, I don't think so. If we take a look at going back to 89, in 89, this is interesting because we had three that were, within a 3-month time frame, a 2-month time frame from July 25th to September 24th, and we had, here's a p-index date with 215s. Did it really, indicate anything? No, I don't think so, and not at least from my impression, my visualization of what we're taking a look at. In this case here, did this mark between these two right here seem to have marked somewhat of a the market was moving down into these days. Certainly there was a trend change, and it lasted 2, 4, 6, 8 days before it made its high. So those 8 days are kind of interesting to pay attention to. If we take a look at on the 21st, if we take a look at the 21st, it's 21st slide. We take a look at 1998. Here, did it really mark any type of real direction? No, not in my opinion. It didn't. And so maybe you're getting kind of the gist that paying attention right now to this, even though we've had 215s and a 16 planetary index date, in my opinion, it hasn't, it's coupled more with the lunar aspect, the sell on the new, and the perigee than it really does with regard to the planetary index based on my studies that we have here. And I think you'll agree as you're taking a look at the detail on each of these charts. And let's go here to the next slide. We're taking a look at 1981. Let me flip over to the next chart here. We're looking at 1974. In this case here, it did mark somewhat of a low. I am going to, in this case here, in 1968. Now, I see the market is pulling back a little bit. So the Dow is now up 211. So if you don't mind, if there's really no problem, if you don't mind, I'm going to go ahead, even though this is not part of the presentation of the lunar strategy, let me go ahead and just pull up the charts, and let's just take a look and see if we can see anything here, and then we'll come back to the presentation as long as I've got everybody on the line. So now let's take a look at the Qs here. Let me pull this up on the screen so we can all take a look at now what the Qs have done. Is the Qs have gotten, let's see, the low on this swing point here that I'm looking at is September 20th. You had 66 million, and our low was 56.23. We got into that at, we hit 56. No, we didn't get all the way up to it. At 56.20, you can see it's backing off from its highs. The volume that we have, 61 million versus 66 million. So it doesn't have the energy to get up there. Let's take a look at the other indexes here real quickly. I just want to help us with any of the trades. You can see the small caps are now coming off of their highs, which is right here. Small caps are now trading below the 0.618. We're seeing the SPYs here trade down to their lows. Let's see here. Let's take a look at the diamond. So everything is starting to back off as we're coming into the close here. Now, this didn't hit it as well. Okay, I'm going to switch back to the presentation. I did up the stops on everything, and I don't have those handy here. I do see a quick question here. So P-index date equals number of aspects being made that day in the ephemeris. And the answer there is yes, that is correct. Let's continue on with the presentation here. So here's a 1968 time frame. I think this might be where we left off. And in this case here, it's hard for me to say that this planetary index area really is what marked a low. I mean, 2 days later, it established a low, came back and tested it out, but it didn't have really an immediate market turn. And if we take a look at 1964, You can see this was really in the middle of a move. If we take a look at this time period here in 1934, yes, this one happened to work where you had 15 and 16 and a marked an 11-day move. So with regard to the planetary index dates of taking a look at 15 and 16, you can see that, in my opinion, and taking a look at the real information, what's really going on out there, it's not where you would want to hang your hat on it. So instead here, we're going to take a look more at the new moon cycle as having a impact on the markets, and it may be something where we're going to go ahead and, if we're not taken out of our positions, where we will go ahead and take a look at going short the marketplace. And we'll make that decision before we get off the air, folks. This here is now what I wanted to also do is I hadn't really focused a whole lot on the new moon. Now, all of the folks that are new subscribers to the service, all of the Celestial Chart webcasts are archived. And so I would ask that you go back and at your convenience, go ahead and review those. There's a lot of great information in there. There's some detailed studies of new moons and full moons. And what I like to do during each webcast is continue to not cover information that we have covered in the past, but I like to bring new information to you. And so the new information is really a study of the hammer candles. And these candles are very important. I think what I have here is all weekly charts. The handouts are not available for this, but you're able to go back and I think print out pages that are important to you on the webcast. And what we can take a look at here is, we went long Chicago bridge and iron. And one of the reasons, there were a couple of reasons, I sent them out in the newsletter that I had on that you got Monday morning. And these hammer candles, I've marked the three hammers and how Chicago bridge and iron has handled these. And in the Chicago bridge and iron case, we were very close to the lows here, which is why we went long. We were up nicely earlier in the day. I don't have that screen up to see where that is. I think it's up about 85 cents or so, right now. So I want to continue on with the hammer candles that we have here, and here is the NDX, and because these are very tradable. Now again, I've got the weekly candles out, and you can see how they really have the hammer candles. As part of this presentation, are actually a better trading vehicle than the 15 and 16-day P-index dates. Now, it's not the case with all P-index dates, folks, but it is the case with the 15 and 16s where I've gone back. Here is the New York Stock Exchange. You have seen this chart here, and I see the market is pulling back a little bit more. I'm going to switch over, because this is really for your benefit, because this is really all about making money as well as providing some education. So I want to go ahead now, and I want to take a quick look into the 10-minute charts, and so we can see if there's some volume that is behind this move. Okay, so we do see some volume coming out here of the small caps, and we are coming right into where we gapped up into this volume. So let's take a look here, because the small caps were the weak ones, and we want to see what type of information gets released to us. So if the small caps do not reject this price point here, and we're looking at this 10-minute chart at 328, then what we're going to go ahead and do here, if the weak guy is the weak link, and we can see some volume coming out of the SPYs here right now, and we're below the session day low. Let's take a look. I've got Apple up. Here's the Qs. Let me pull up the diamonds here, folks, real quick. I hope this is okay with everybody, because this is really all about making money and protecting our profits. So let's take a look at the diamonds here real quickly. You can see some volume right now starting to come out of the diamonds going into, let's see if we get a rejection here. Let's see, you've got 645,000 shares, and we're coming into it with 511,000 shares right now. We'll wait here. Let's take a look at, let me pull up the Qs here again. And this is our 10-minute chart. And the Qs here, we had the open. So, we came up with 3.4 million shares. We ought to get a rejection right about here, right now, because what we're doing is we're coming into this area with 1.5 million shares. If we do get a close below this area, now, we may have been stopped out already of the TYH and the QLD. Okay, so I'm just going to continue to pay attention to this and flip back and forth between the charts. So this is a real working seminar, if you will. So these hammer candles, folks, very, very important. What you can see that we did here in the New York Stock Exchange is we had a close below this weekly hammer candle. To me, this is a sign of much further weakness to come, and is why I send out the warning sign. When you take a look at where I really believe that we are is if you measure from the high in the New York Stock Exchange down to the low of this candle, and the high goes back a little bit further than this. What you'll see is that the move from here down to the bottom is just about the same. So what to me that is saying is our move from the May highs down to this area, we should see a similar move down. Now we're going to have to break through the lows in the other ETFs, but the New York Stock Exchange, which is a bigger breadth, absolutely is telling us and giving us all the signals that this market, is going lower. If we take a look at the Dow Jones, what I really wanted to do was take a look at us shorting the Dow as soon as we broke this hammer right here. And, we tested it with the high volume back in August. And again, this is on a weekly basis. I'm going to flip back to the charts right now since you guys seem to be okay with that. So that's good. And so let's now come back. We're back inside the Qs here. So you can see it's still hitting up against that low, and until we break that, we will stay in our position if we haven't already been stopped out. Now, one of the things when I'm taking a look at something like the TYH and the QLD, folks, is all of those are really being played off of the Qs, and so the price projections on those are, you can't correlate, in essence, tick for tick, if you will. And so the price projections, for example, on the TYH, we hit our price projection, but we didn't hit it on the Qs earlier. And so, we play these doubles or these triples. Some of those price projections, again, they're a projection based on a pattern, but it would really be the Qs that would give us the signal. So, right now, what we're watching the market do live here, as we've come into, where we had some volume, we're seeing a rejection of that area. And this is what we're really looking for, is we're looking for some confirming signals to go along with what is happening in the marketplace. And again, what's happening in the marketplace as far as the lunar aspects, and the P index aspects. And, what I do is I'm pretty methodical. Like to rely on my own work, which is why I went back and I went ahead and have all of the digital data of the ephemeris, and I'm able to simply lay over each of the charts the actual P index date. So, irregardless of whatever studies might have been done in the past, what I want to take a look at is what's going on, current information, as well as going back as far as I can, which basically is typically to 1929, and seeing if there's something that gives us a probability edge. And so anyways, I'm going to go ahead and switch back to the chart since right now we haven't gotten any type of confirmation. Let's do one thing. Let's go quickly and take a look at the small caps here. We're going to take a look at the small caps because those were the weak guys. So we got the small caps. We're going to pull up the 10-minute chart there. And the small caps also, we're coming into this thing gapped up this morning. Again, 4.6 million shares. And right now we tested the low of that. So the low on that was 67.66. We got down here, in the last 10-minute session to 67.72, 67.66. So we did not test the bottom of that, but we had 4.6 million, and we came into that with 3.6 million. So volume was picking up, coming down to that. So this is going to be an important time period here, the next 10 minutes or so on the small caps. But again, we're looking for a signal here. If we break these, we will go ahead and flip our positions to short positions, which means we would go into the QID, if you will. I'm going to switch back here now to the presentation, the normal presentation. Let's go and move from the Dow Jones into Marathon Oil. You can see this hammer. Now, this was back in the 09 time frame, the March 09 time frame, but you can see in Marathon Oil, on a weekly basis when it broke that hammer candle that it went on to make its lows. If we go back and we take a look at this next chart here, rider systems, look at rider systems, how well these hammer candles, once you broke this hammer here, how the market continued to move down. And we'd have to use other Fibonacci tools. Probably this is a 1.618 expansion between these two swing points, this here, this low right here, and this high right here. And when we enter a trade, we'll take a look at that type of information. You can see we have a hammer candle on rider systems that came in here. Now, what I like to trade hammer candles is I like to buy a test of the hammer somewhere between the halfway point of the wick. And the wick, folks, on the hammer, we'll take a look at this one right here. It's a little bit easier to see. About where this arrow is pointed is about the halfway point. And so I like to be able to buy into these somewhere between the halfway point and the bottom, because these should act as good support areas. And if there's a close below it, I just simply go ahead and I take my loss, take my stop, if you will, because when you close below a hammer, it tells you that there's very ominous things to happen, and it's unreliable to stay inside that equity. You wait for some other further signal. If we go take a look at the NVIDIA, now this is one here. This was kind of a surprise to me because I've been taking a look at, I love the stock. I love the stock primarily because of the volume that we still have up here that hasn't been tested. It's not at the very high, but it's near the highs. We can see how well this hammer candle, we had this hammer that showed up here in the August 2010 time frame. It got tested. Maybe it didn't get all the way down to the 50% time frame, but it got very close to it, and you can see the move that we had. You can see when this hammer candle here failed, it continued to move on. You had two hammers fail back to back, and you can see how NVIDIA moved down. So that actually gave me, as I was going back through all of the information, looking through literally thousands of weekly charts for hammer candles. I was actually it was interesting for me to take a look at NVIDIA. If we take a look at U.S. Steel, again, this goes back to the 2009 sell-off time frame, but you want to understand these hammer candles because you can see how they give you information when you close below them, and you can see how they give you information to be able to take a trade. Look at here, U.S. Steel, once you close below, even though they're small, again, these are weekly candles, these are still hammer candles. If we take a look at the next one here, which is American Tower, and American Tower is actually, this is one, folks, that is on my watch list for us because I believe this thing is out near its highs. I can't totally recollect, but I am looking for American Tower to be able to pull back into this area before we would take a look at a trade. When it pulls back into this, if it does pull back into this area, I believe we also have this high volume bar here. So, the test has already been done. What I would like to see this is a viable trade if the market can move back down into this area. If we go take a look at this next one here, this is Amgen. Again, here's the hammer. Boom, it keeps coming through. Here's the hammer at access support. Just for a couple of days, it breaks through here. And Amgen is a stock chart that I do like. But now that I've taken a look at the weakness that this thing has shown with regard to hammer candles, I will look elsewhere. AKS Steel breaks the hammer. Look at what it does here. We take a look at Aetna. Now this here is showing you, what you like to see is in a stock chart, you like to see where you've got some type of consistency because it really helps with your trading reliability. So Aetna is one of those stocks where, the next time we see a weekly hammer that pops up, it looks to me like we want to go ahead and we want to play Aetna as an individual stock. So, and as you can see, folks, those that have been subscribers for a long time, or even those that have been subscribers for a short period of time, I look not just at the ETF indexes, but also at individual stocks for us to play. Archer Daniel Midland, again, I think hopefully you're getting the you're getting the point on the hammer and why I like that candle and why we'll take a look at that and why I do scans for those hammers, because they really do help us in understanding it. Because now when you have a hammer and it fails, folks, what you can do is you can take the short side of the trade, and we just want to have the right money management in place, and we do have that. Hopefully everyone is using the tool, the probability calculator that we finally got up on everybody's web page, and I'll pull that up as well and answer any questions that I can on that with as much time as we have. Here's Home Depot. I have Home Depot on our list, our buy list, if you will. This has completed an ABC down, and it completed an ABC down on a weekly basis into this hammer candle. If we can get Home Depot to pull back into this area, we'll look to go long Home Depot. I'm going to switch back over to the charts as we're continuing, the live charts as we're continuing to go into the close here. Let's take a look at what we've got. And so we're back in the small caps. The small caps are still holding this area. Let me just take my volume tool here, my line, so I can really pay attention. Okay, I'm going to come and take a look at the. Let's take a look at the Qs, see what we have here. So on the Qs here, we're up against. We've broken through this line of resistance, if you will, this line of support on lighter volume. Well, you talk about the importance of volume here, and let me just pull this down so you can see that we're breaking this right now, but we're breaking this on lighter volume. Apple must still be having some real troubles, as well as Amazon. Let's take a look at the SPYs here, see what the SPYs are doing. Okay, that's not when the SPYs are breaking this thing with volume. Okay, so here's where I'm at, folks. It's in taking a look at this. What I am doing is I'm issuing you, for everybody that's on here, I'm issuing you a short alert. If you are not out of the Qs trade or the TYH trade or the QLD trade, now is the time to go ahead and take your profits. And now is the time to go ahead and put in a short position. So go ahead and go into the QID. Off the top of my head, I don't recall what the triple is to go short on the Qs. If anybody is listening in and has that and they want to punch that up on the screen, that would be great. And but we're going to go ahead and we're going to play the new moon cycle, which is the SQQQ thinker, the TQ. Okay, so we're going to go ahead and play the new moon cycle. I'm going to go ahead and switch over to the tool, if you will. But for all of you that are long, go ahead and take your profits now. We still have time. There's 20 minutes to go ahead and get some short positions in. But to me, that is the thing to do. And the SPYs just went ahead and gave us that clue here. So let's go ahead and do that. This is truly a working webcast. One of the reasons that certainly I wanted to hold it during this time frame. So let me pull up the tool here. So let's take a look at the QID. Let's do this together live. And the way that we would work this tool out here is we've got I'm going to put in the QID. And what you'll do first is just go ahead and hit the search button so you can just simply make sure that it pulls up the vehicle that you're taking a look at. In this case here, the QID, even though it's a short position, we're going long. This is a index ETF. I will choose the bull long. And, we play these indexes because many folks are trading with their 401ks. If you will, and this is a way to be able to trade, go short by taking the inverse of the trade. Again, you would put in whatever your working capital is. In this case here, I'll put in $10,000, which I've been using for standard here is our average true range. Now, the estimated price. So let me go ahead and pull up the QID here real quick. Okay, so on the QID, we've pulled back. We've pulled back into this low. Interesting. We've rejected this on a little bit heavier volume. The QLD, this would be setting up an ABC up. That ABC up would take us to 55.42. Let's assume that we enter right about now, which is 49.13. So let me go ahead and pull the Trader's Edge tool back up. So we got 49.13, let's say, is our entry point. I should have written down what our projection was real quickly. Let me flip back and forth. 55.42. And we probably will not have to use a 2.7 stop multiplication factor. That doesn't give us a good risk reward, and it takes our hard stop down to 42.49, which is going to be a little bit too much. Oh, gee, sorry about that. We don't need to have our stop only needs to be below this 45.47 area, okay, which is the low swing point out there. So I'm going to come back here to the calculator. So 45.47, and I'm I'm going to go ahead and I'm going to adjust the stop multiplication to 1.5, so it's at least 1.5 times. Let's see if that gets us up there. 45.44. So that would be the trade setup that I would have. Even though it shows a reward to risk of 1.7, I have to do just a little bit more work, and I'm doing this really on the fly here. Let's see here. This is really. Let me get rid of this. Yeah, see this high volume out here, this high volume bar, and the low of that is the 5612. You know, this is the first area on the QLD where you can expect to kind of see some resistance, if you will. And so, which is really right in line with the ABC. So, I know our target area for our decision-making process is the 5612 area. If you come into that area with a good volume, then you'll head towards the top. So 5612. So that is that's the trade setup on the QID. Let me pull that up here. Yep. So that is our trade setup on that. Are there any questions, since I am doing this thing really live, if you will? Any questions on what to do? And then what I'll do is, you know, when I get off the program here, I'll go ahead and get a newsletter out, do a little bit more work. You guys, for just simply the benefit of having been on at the right time, you're able to get into trade. Now I'll send out a Twitter alert to folks to let them know that we are going to go short the QID, and I can probably even do that while we are online here right now. But let me go ahead, since this was impromptu, if you will, with regard to actual live trading. Let me take any questions that you might have before I go back to the presentation. Even though on the hammers, I think I was pretty well set, and probably most people were wondering, what are we going to do? What's our strategy for the? Well, on the TYH, you would close out the TYH, and it looks like what you would do is, we were taking a look at the triple is what? It's the SQQ, is that a TQQ? So we can go ahead and pull up the TQQ, see if we've got this for the triple. Sorry, SQ, thank you. I don't have any data. On that for some reason to be able to pull that in here. So I'm going to have to do that a different way. But what I would do is I would go ahead and enter. You can go ahead and enter your positions now. The question is going to be the position size. I would. Let's see if I can pull that up here. Okay. So go ahead and enter the. Let me do this on a weekly basis. I'm going to give you the parameters, and then you'll just have to do the math on this, if you will. So what you want to do is, we're going to go from high to low, and that's going to be our average true range. So 2632 minus 2080. 2632 minus 2080, if somebody can do that. And then the next range that we're going to look at is a high of 2731 minus 2160. So 2731 minus 2160. Add those two figures up, if you would. Divide that by 10 and multiply that times 1.5. That's what you should use as your stop if you're going to go ahead and take a trade on the SQQ. And then I'll do further work on that and get that out in a newsletter update this evening or early in the morning. I'm going to just send out a quick tweet, if you will, going short the Qs. Take a trade on the QID or the SQQ. Has anybody, by any chance, figured out the stop on the SQQ out there for us? Hey, we're moving the Qs, dropping steadily. Right, we are selling the Qs. That's right. Okay, so let me see if I can figure this out. So we went from 26 to 20, so you had a $6, $6, 6 and 6, so 12, so 120. So use a $2 stop on the and on the Qs. What did we have on the Qs? Let me pull that up here real quickly. Let me pull that back. QID. $246, 369 on the QID. Okay, so I've got this out there. Okay, I've just sent that. Thanks for allowing me to multitask on that. Sorry, Steve, I keep messing up the calculation. Nope, you guys are doing great. Thank you, I appreciate that. So this is truly a live. This is truly a live event where we're doing a little bit of trading. So we are moving out of the Qs as far as the long position. We are going into the short position. We are truly playing the new moon and strategy. And my guess is that our stops were taken out now. What I can do is let me also go ahead and pull up the TBT. We have just a couple of moments here before I need to get off the air because we got Tom starting his show shortly. And, folks, I hope this has been okay for you. It's been a little bit of a impromptu, if you will, quite a bit of an impromptu, and but hopefully that's a good thing. Let me take a look and see if there's anything else that I had out here on the slides that I really wanted to cover for you. Just, you've got Cisco, so that we're up there, hammers, and then you've got, this is BA, so you can also take a look at the hammers that we have there. So, folks, I hope that is helpful, and what I want to be able to do is get, is make sure I also, not everybody is on Twitter, and I know we're going into the close. I want to try to get a quick newsletter out to folks, and there's no way for me to totally multitask and do that. So I hope you'll, if you have any questions, please send me an email. I'm absolutely always available to you, or at least able to get back to you within 24 hours. So, and I appreciate the comments as always, and you guys have a great day, and we're going to just simply continue to make money and keep protecting ourselves. So, folks, have a great day, and I will talk to you in the morning, okay? Take care. Bye-bye.